Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. As we have promised in today's report, in fundamental report, we have prepared analysis of the recent BRICS summit. But of course, we mostly were speaking not about the summit itself, but in the shadow of the light of the recent piking between the China and United States, and where this real confrontation leads us. So we see really big problems with this, and we think that it will be really very negative impact on global finance and the global financial system in the nearest couple of years. So it will be really, drastic shifts, and it will be a real big collapse in all financial markets. So in fact, we brought some analogy between the events that have happened in the Russian economy, because actually it has met with the same story, but in a region of the single country. Taking a look at the performance of the indexes, what has happened in Russia since the special military operation has started. And in a parallel analysis, in fact, you could expect the same dynamic of the major assets, I mean currency, commodities, stock markets, but in a scale of the global finance. And things that you will see in the report, guys, hardly will be really pleasant. So it's really fun to read. You could see what's happening, and we're also taking a look at the progress of this separation of the China and United States out from each other. So that's the major story, and all this stuff we're trying to analyze from the performance of the gold market. So what could happen in the gold? What could happen with the dollar index, and it explains why we wait, and actually we expect that the gold remains under pressure. It's just because the dollar index should rise in the nearest year, approximately within the year. But reversal inevitably will come, and especially in the gold market. It's absolutely definitely, we could say, about this. Besides, the overall pressure on the gold market will be a bit softened by the rising of the inflation in the United States. Just because once the Fed will stop rising rate and the inflation will keep going higher, the real rates will also turn down, which will provide supportive factor for the gold. And that's why the overall negative impact hardly will be very significant on the gold market. All in all, with the 5.5 interest rate right now, gold is showing just a minor 30% retracement out from the tops. It's just, you can see how stubborn and really stable the gold market right now. So all the stuff you could read in the report. Speaking about the technical picture, we have some reasons to suggest that market could show a bit deeper upward action. The pullback that we were waiting finally has happened on Friday with this drop. It was not totally the 618 level, so we could say that the Brent body trade that we were mentioning was slightly not completed, so that was just a 50% retracement, not the 618. But overall background that we have, if you'll take a look at the weekly chart, you will see that here we have bullish engulfing. Additionally, if you'll take a look at the performance on the 4-day frame chart, you could see that it's not really straightforward to the downside. It's a bit choppy, and it seems that market is stubborn and do not want to go lower. And that makes us think, so all the stuff together, that we could get a kind of the ABCD retracement here on the daily chart as well. In particular speaking, on the 4-day frame chart, it could look like this. So you could see, yes, reaction on the strong confidence resistance and agreement. Recall that we also had here kind of the ABCD XOP target, which was the target of these head and shoulders that we traded for the week. And reaction has happened. So it was the 50% pullback up from this area. But you can see that market very fast retrended back up. And then mostly it stands tight in this some kind of the flag consolidation. As a result, we've got this high wave pattern. And in the case of the upward breakout of this pattern is taken out with this top, it will confirm further upward continuation on the gold market. In fact, we could get this kind of the ABCD pattern to approximately 1940-1943 area based on the weekly engulfing. So that's what we suggest might happen. On the hourly chart, here as you have a few levels of decision making that you could follow. Let's take a look what is done. First of all, market has completed XOP to the downside, and finally this pullback has happened. So if you remember, 2 days ago we talked about this performance and said, well, yes, market is moving lower, so if you take in position here, you could move stops to the break-even, see what will happen. And would not recommend take the new positions around this level, because overall reaction stands weak, and it seems that market is preparing for challenge the resistance area. Indeed, you could see what has happened right after that. Market almost has returned back to the top, but then retracement finally is done. And after that, as you can see, really fast return rate become here as well. So once the XOP has been touched, market returns back up. So if you're in the current situation, of course, we are not considering taking any new shorts position. So because reaction already is done, overall performance of the market looks more bullish rather than bearish. So it stubbornly stands near the level. We have fast upward return back above the confluence and so on. So at the same time, are a few, as I said, different options you could choose. First of all, to minimize the risk, you could consider either upward breakout of this area that will confirm that market's going higher, and then trying to jump in on some minor retracement, maybe back to the previous stops, for example. It's one of the possible scenarios. Or wait for a deeper retracement, because we have weekly engulfing. If market will show 618 pullback somewhere to the 19 even, 1902 area, with this kind of the A, B, C top D pattern. So now I could just delete this, do not need it anymore. This is also, if it will be some kind of this A, B, C, D, right, to the downside. You could jump in with the, well, stop somewhere either below the lows or below, right below this level. This market will give you some kind of the gutless triple to buy. That will minimize risk. Or if you still would like to take position right now, anticipating possible upward continuation, which brings a bit more risk, you could, for example, use the split of the position. That could help a lot. For example, you could take the 30% of your normal trading line right there, and if market will still form this ABCD pattern, you could add the bulk of the position right here with the stop somewhere below the 618. Because in the current environment and with the performance that we see right there, I suppose that if market indeed stands bullish, it should not break the 618 level, at least based on the price shape that we have here. Correspondingly, if you would like to go short, you will have to wait on the erasing of the overall bullish context. It means that market has to break high wave pattern to the downside, which simultaneously means the drop below 19 even 618 level. So if this will happen and market will break it down, that probably tells us that short-term bullish context is not valid anymore and market is going lower. So it means that this level probably will become the vital for our scenario, and everything depends on how market will behave. Either it will stand above it or drop below it. So that's our trading plan for the gold. In 2 words, until market stands above it, we consider bullish positions, and we suggest that it might be more extended upward action. In any case, if market will raise this scenario and drop under it, sentiment probably will change, and we will have a chance to go short and see what will happen in this scenario.